live on Monday morning, July 2nd, and this is going to be a quick but brief update because we just put out an alert for subscribers to Get Long Twitter. If you've missed the uptrend in Twitter, which we've played several times in the last few months, this may be an opportunity Twitter may be setting up here. So here's a 10-minute chart, and you can see on June 28th here an opening, a shakeout that was bought. Players were looking for the bid. It got traction, and the same thing again this morning. So here Twitter shows two buying the whole bars in the last few days. Going to the hourlies, we're going to look at a multiple time frame analysis and how that sets up, putting the pieces together, how that sets up a good risk to reward setup. Here are these two, what I call buying the whole bars from the 10-minute before, and now here they show up on the hourly, and you can see this stair step, 3 to 4 drives down to a possible low on the hourlies. Twitter is just skating below, hugging below the 50 period. This is an hourly chart, which is this blue line here. Trade over the 50 period, which is going to be at around 44.50 to 44.60. That holds will trigger a little, I say little because it's an hourly chart, a little rule of 4 buy signal. In other words, trade above, a 3-point declining trend line. Now, within the context of the dailies, you'll see that this is all playing out within the context of what shapes up as a likely bull flag with a little W bottom here at the 20-day moving average, this rising red trend line, this rising red moving average, I should say. And this is all, again, within the context of a gap just above this breakaway gap to the upside here. The risk is the market is going lower, but the risk to reward in Twitter here is such that the stop is easily definable. I'd say just below these 2 points here, and the weight of evidence warrants a position, especially if the market is heading higher. So we have long positions on as well as short positions, balancing out whichever way this fulcrum of the year, which was tested again on the S&P at 2702, the midpoint of the year, was tested again this morning. If that breaks, let's see, the low this morning was just right around there, 26.99. So if 2,700 is taken out again this morning with authority, we may cut back on our Twitter, reduce some exposure, and see if the stock trade around a core position. See if the stop then on Twitter is hit, and it's going to depend to some degree on what the market does. But right now, early in the day today, and again last week, Twitter was a green bean in a sea of red, showing superior relative strength. That's it for now. I'll let you go. Be back later today with another video. Good luck out there trading. Appreciate your time. Thanks for listening.